For starters, I think this is something that a lot of people are aware of, but I think there was a recent thing that I've seen. The post itself is a little bit older, but it was new to me and I wanted to share it with you guys. And really, it's the stats behind the renewal cliff, the renewal wall, renewal again, and whatever you want to call it, all the renewals that are coming up really in the next, call it 2 years. And really, it is 2 years. So the one that I saw that came up, this is from Wawa. I don't know if they have a podcast, but they have a website. They have an Instagram account. They have a lot of great stats that they publish. I think actually recently, Pierre Poilievre referenced one of their stats or studies that they did. So they have really quality data and they do a lot of good work. And yeah, as you can see here, I just pumped them up in terms of their stats. I think it's a great in terms of information. I wish it was a little bit more visual. We could see it. But what it is here is basically, this is from Q4 last year, the stats available then. Each column is one of the big 7 banks, which I think do 98% of the mortgages in Canada. And then each row is when the renewals are coming up in their book, in their portfolio. And really the punchline is this, is that if you look at the first 3 rows, for those who are actually on the YouTube channel, if you don't know our YouTube channel, please go there, check it out. It's really great to see these visuals. But if you're just listening, I'll describe it to you. Really what it says is over the next 2 years, 25, 26, 50%, half of all mortgages are going to be renewing. So yeah, it's real. I mean, all those things that people have been telling you about is, confirmed here. The idea of this renewal cliff is happening. It is going to come quick. And I think, we got to be ready for it. And so what does being ready for it mean? Well, I think with this renewal cliff, there's a couple things to keep in mind. First of all, a lot of borrowers are coming up on renewal, probably still higher rates, right? So if someone's renewing from 2020, for sure it's going to be a higher rate. From 2021, probably going to be a higher rate. If they took a 3 years ago, I was one of those people, it might be a little bit more on par. So maybe we have to worry less about those people. But for those people who are going to be coming off those much lower rates from this COVID days, for them, I basically just say, you need to get in front of them a lot quicker. It's not enough for them. If they see this big jump, they're almost for sure going to be rate shopping, right? They're not just going to see the big jump and say, hey, I'm going to take your word for it that this is the market now. They're going to validate that assumption. And on top of that, what's happening is, okay, yes, they're going to maybe be more shoppers, more people looking around. And the banks are being pretty aggressive right now. They are going out there and they are competing on rates. So, maybe that borrower banks personally with RBC, they go to their local branch, they get a great rate. And, that's a tricky deal to close. So I think you just have to be aware of those people. So I'd say, bringing it back to the mortgage tech, I'd say, take a look at your database, filter for those people who are coming up for renewal that did get, maybe those low rates in 2020, 2021, and start reaching out to them sooner. And really try and drive the conversation away from rate. Obviously, rate is very important, but really what you can do with that is, I would say, go from being just the transaction and go towards the trusted advisor. So don't just say, hey, this is happening, you have to sign some papers and do it. Be the advisor, right? Come in and say, okay, this thing's happening, but before you do anything, before you sign anything, let's take a step back. How are things going in your life? What, personal goals do you have? What's changed in the past 5 years? And if you can do that, you're changing the value you provide, obviously, as a broker, from just the person who can get you their mortgage and the rate, that transaction, to being someone who helps them more overall. So I'd say, yeah, bringing it back is identify those people as early as possible and then set up a cadence, make sure you're reaching out and providing that value. The other thing I'd say too with this, especially those people, if they are on a variable rate and they kind of went through the roller coaster up and down, they're still probably a little bit sore. A lot of these people might be saying, hey, I did that variable rate. It really bit me last time. I want to go to a fixed rate. And I'm not saying that variable or fixed one is better than the other. I think we just have to do our jobs as brokers and say, okay, well, yeah, there's these two things, but just because you had a bad experience over the past 5 years with a variable rate, yes, that was extraordinary times. It doesn't mean that's going to happen again. Historically, this is how these rates have compared, and just giving the clients that education to make the best decision possible. So those are the big trends I'm seeing, and I feel that now is the time to jump on it, because if you want to establish yourself as that trusted advisor, you can't just wait for a day before the renewal, right? You kind of have to help them and hold their hand through that journey.